Welcome to Citrin-Cooperman's Corner Chats. I'm Peter Katz of West Fair Communications, publisher of the Westchester and Fairfield County Business Journals, West Fair Online, and digital newsletters to help keep you fully informed. Citrin-Cooperman has released its newest manufacturing and distribution pulse survey. And joining us to discuss it is one of the authors, Mark Fagan. Mark, welcome.
Hi, Peter. Really excited to be here today.
And Mark, just by way of background, we know you're a partner in Citrin-Cooperman's White Plains office, a member of the firm's executive committee and the Citrin-Cooperman Audit and Attest Committee, and you have more than 25 years of audit, tax, and business advisory experience, serving clients in a wide range of industries, including technology, financial services, private equity, manufacturing, and distribution. And Mark, let's begin by jumping right into the survey. Tell us a little bit about the concept behind the new Citrin-Cooperman survey.
Sure, Peter. Thanks very much. It's actually our third annual survey, and it goes out to 200 manufacturing and distribution companies across the U.S., but about 50% of them have operations internationally. And it's this year we titled it "The Rewards of Agility," because it seems like the top performers showed the best ability to adapt to change.
And how do you think this survey compares with others you've done? Were there any surprises that jumped off the page at you?
Well, Peter, this year was a step away from COVID. So much of last year's talked about just surviving COVID. And this one, you saw the companies just doing things that were more than just survival. It was really adapting. And the biggest thing that we saw in the top three takeaways was that those that did the best were agile. They reshaped their product offerings. They increased their online e-commerce distribution channels. And as you would expect, the supply chain manager ended up being the most important person in the firm for many M&D companies. And then lastly, and has also been in the forefront the last couple of surveys, the data analytics and artificial intelligence continues to be a very important part of M&D companies, both now and I think even more so in the future.
In terms of the key parts of the survey, how would you describe those? What are the key areas that the survey covered?
Yeah, so why don't we talk about a few of those? The first is the statistics and financial statistics and how companies did. For the second consecutive year, there was an accretive growth of both revenue and EBITDA. And this year was even more robust than last year. So while COVID devastated a lot of different industries, in 2020, in our last survey, M&D did pretty well. And in this survey, they even did better. 81% reported significant or modest growth in revenue and EBITDA as compared to last year. And this is up 34% from what we saw in the prior survey. And how they did it was interesting and a bit diverse. One, they saw demand shifts that were based on the COVID environment that we were in 2020 and continue to be. And they saw the effects on consumers. So those that did best pivoted to take advantage of those demand shifts. Also, adoption to e-commerce channels. Again, we've seen in our past two surveys the continued growth of e-commerce as being a bigger source of sales. And this year was no different. Actually, there was more of an acceleration. More companies are up to 75 and 80% of their sales are in e-commerce. And then lastly, new product lines were offered. Again, part of that was because of shift in consumer demand.
As one of the authors of the survey, when you saw the results coming in, was there anything that instantly surprised you, something that perhaps you weren't expecting to see that all of a sudden you saw results on?
Well, I think the biggest there was a lot of things that we kind of expected, supply chain, access to labor, all the things that have been in the headlines for the past, for the past 12 plus months. But then also the ability of significant change in business models that was happening and the reward for that. It was almost like those who took the risks and made change quickly were the ones that significantly increased revenues and EBITDA by a multiple factor. So you were really rewarded by taking risks.
If someone wanted to see the survey, how would they go about seeing the results of this?
Yeah, they can go on to the Citrin-Cooperman website, and it's sitting right there in our manufacturing and distribution section. And it's like I said, I think we get better at it every year, and this one's got a lot of really keen insights.
Let's drill down a little bit into some of the specifics. What did you learn in the survey about the importance of customer satisfaction? How do business people these days view that as an element?
Yeah, customer satisfaction, Peter, and the customer experience again is, and you see this a lot and you hear about it in the media, is very important. And probably as you would think, product availability was the number one challenge and number one most important thing to our respondents this year. Also, pricing was very important. And this was one of their biggest challenges because the cost of containers, the amount of time getting product, if you were sourcing from a different country, let's say China, that was the one that obviously is the most reported on. The cost of a container quadrupled over the past, 18 to 24 months. And the amount of time it took to get that container more than doubled. So you had container ships sitting off the coast of Long Beach, and you had these, products that might have cost $25,000 to ship over with a $3,500 shipping cost, now had a shipping cost of over $18,000, almost as much as a product itself. So the pricing and availability of the products was the number one and number two things that were important to our respondents. And third was customer service, and that gets back to the whole customer experience. It's important for these companies to have user-friendly websites to be able to show the customer with good customer service, an easy to order, free shipping, obviously, and that's where, also in the past we've talked about the ability to use Amazon. All of those things were very important this year, and probably more so than any other year.
Was there anything that enables you to make a correlation between customer satisfaction and revenue growth?
Yeah, the ones that were tracking customer satisfaction and really paying attention to it had the ones that were the ones that really had the best revenue growth. And this gets into another part of our survey with the use of technology. 69% of respondents say data analytics are currently in place to improve the efficiency of their operations, and they're getting that efficiency. But then when you really dig down into the more sophisticated parts of data analytics and artificial intelligence, you find that most companies are just scratching the surface with these tools. 59% use data analytics to better understand customer behavior, but at the same time, only 25% of respondents have the systems in place that they feel are going to keep themselves competitive. So I think most companies, like I said, are just scratching the surface with when it comes to utilizing data analytics and artificial intelligence.
Was there anything in the results you got back from participants in the survey to indicate that they realize that there is this gap in the use of technology, making effective use of it to help business operations and ultimately the bottom line?
Yes, Peter, there's several different data points. One of them is they're very concerned about their ability to attract the right talent that can utilize these data analytics and bring to the table what's necessary. And that was even the case before this workforce dilemma that we're in right now, where it's just hard to get people to really fulfill everybody's open spots that they have. Not only do you have open spots in many companies that are not filled, but the talent level in those spots are there's even a wider gap. So companies are concerned about not only getting the tools to be used, but also getting the talent to be able to utilize those tools and really take the software to its ultimate benefits.
When it comes to supply chain issues, what kind of information were you finding? Were they just frustrated with what's happening, or were there definite efforts being made to take positive corrective action somehow?
Well, the best companies just did more than become frustrated. They did many different things. They negotiated with their suppliers and with their um, retailers to try to share the burden of these increased costs to market. They also looked at um, different ports of entry. If they couldn't get into Long Beach, California, they were looking at the east side of the United States to get into the southern states of Georgia, Florida. They were also putting warehouses in different locations in the US to try to hold inventory in places closer to their customer. Just in time inventory is a thing of the past now. And the good CEOs realized that. So they started stockpiling inventory and really are changing the way that they're operating their business. And it's got a lot of uh, impact to cash flow requirements because the cost to get your product here has in some instances quadrupled. The length of time to get it has doubled, and the fact that customers want this product, the same thing, same day shipping, the amount of working capital that's necessary to run a business has increased significantly. And on top of that, now capital is more expensive with interest rates going up. So there's a lot going on for the leadership teams and the CEOs to handle in order to just run their companies the way they had in the past. It's much more complicated.
It sounds as if this survey has uncovered a lot more critical information as to what's going on in the real world of running a business and getting the supplies and products you need than we've been hearing in news reports, which seem to focus just on hand wringing, to coin a phrase.
Yeah, it does. And the news reports are getting those one or two bites. But if you really look at it, like I just, if you think about what's happened in 2021 and into 2022, factory shutdowns, material shortages, blocked shipping lanes, increased container prices, difficulty accessing skilled labor, inflation, military conflicts, rising interest rates. These are all disruptive factors that are increasing the complexity of business. Now, you've got to have you've got to have thoughtful processes and procedures to combat these. The you know in the past, you would have one or two of these disruptive forces, but now you've got so many. And CEOs need to embrace risk management as one of their top strategic responsibilities.
Is that part of making your company more agile, more able to respond quickly to the changing scene? Is that something that Citrin-Cooperman found in the latest manufacturing and distribution pulse survey?
Yes, it is the top challenge in the Pulse survey. Changing business models to adapt to the next crisis is the number one challenge that respondents told us. The second was the ability of the workforce to embrace utilizing changing technology. As I mentioned before, they it's change is difficult, and technology can be a big part of some of these solutions, but the employees need to adapt to the technology. And then, financing growth was another factor because cash and capital has been very cheap for the past 20 years. Now, with the Federal Reserve having multiple interest rate increases, it's going to be much more expensive to hold the inventory, to acquire the fixed assets that you need, and the software that you need to run the company.
If I were the head of a company and I got hold of a copy of this survey, what would I find in there? What clues would there be for me to do something to ensure that I'm going to have strong future growth for my company?
I think it's a couple of things. Technology is most important, and that's one that may not necessarily be the easiest for the owner of $100 million or even a $500 million company to embrace, because it's very expensive. It's very unforgiving to make mistakes in technology. To implementing a new ERP system can take 2 and 3 years, and that's really the biggest. This Industrial Revolution 4.0 continues to be at the forefront. It was accelerated by COVID because there's more of a connection from the sourcing of product to the customer. There's not as much people in the middle of that chain, and technology, and those who utilize that technology be able to look through to your source, your vendor, and understand where the inventory is in their company, to be able to see all the way through to your vendor's system, all the way through to your retailer system, and have those systems talk to each other. That's a big part of the future, and that's what the biggest companies, the Fortune 50 companies, have been spending billions of dollars on. So with these middle market companies, have to be able to make the right choices to when they're picking these ERP systems and adapting to this change, because it's just very expensive to make mistakes.
Aside from the situation in coming out of COVID and inflation and the increasing interest rates, were there things that jumped off the page in this survey compared with previous surveys?
Yeah, there were a few things, Peter. One is 30% of respondents have either experienced a cyber incident or have had a breach. That is a significant jump from past surveys. So it's not a factor, or it's not an issue of if a company is going to get breached. It's when they are and how prepared they are to respond to that breach. So that was a big one. The other was, and I kind of mentioned this, second year in a row that we had accelerated growth. So we continued to have good years, one after another. Um, and then, the key to future growth in the prior year, the key to future growth was e-commerce, technology, and new products. This year's key to future growth is stabilization of supply chain, stabilization of the workforce, and utilizing best-in-class technology. So technology was in both of those, but having a stable workforce and having a stable supply chain, they weren't even a thought in the past. So it just shows how much more complex business is becoming. And I think, again, the thing to take away is you have to utilize technology, and you have to really utilize best in class technology to be able to combat these disruptive forces.
What does the survey tell you about what may be coming next for businesses in general? Any forecasts you can make based upon some of the data?
Well, I think that there's a cautiously optimistic business owners out there. They understand that business isn't easy. They understand that they have some real serious issues on multiple fronts. So I think that's frankly healthy, because that means that they're not going to fall asleep at the wheel and everybody's fat and happy and just making money. So I think that they understand the competitive environment and that they're going to be digging their heels in. And I could see that, there could be more companies that are not able to keep up with or have the right talent inside their company may not, last another 5 years. Because it's one thing to, when we went through COVID, you had a shutdown and you knew what you had to do. Now the decisions are more complex, especially with the changing technology. So access to talent and retaining talent is going to be very important.
Now, as a person who makes recommendations to clients, you provide guidance to clients. How does having all of the data that this survey provides you enable you to benefit your clients?
Well, it tells us, and then we talk to our clients about where the industry is going, where their competitors are going, how their competitors are doing, and then you can measure how our clients are doing in relation to the competitors. Because maybe our clients are ahead of the game when it comes to best in class technology and the ability to get employees who really embrace change and embrace um, technology and the technology advances. Or it could say the other thing. It could say that, that they're significantly behind and they've really got to invest some more money to be able to keep up, because that's the biggest threat, to be to wake up and find out that you're just not competitive anymore in the marketplace. That's just a death sentence.
How does Citrin-Cooperman plan to continue with this survey? Are there things that perhaps you realize you left out or could have drilled down further into in the current survey and would be expanding next time around? Just what is the take? What is the philosophy now going forward with this type of survey?
Yeah, great question, Peter. And one of the things that because the survey was finalized and the questions were finalized in February and early March, we really didn't address inflation, and where we've come from last February to now with inflation is you know is a big difference. So that's one. And then, what else is going to happen with ESG? That's going to be a very important part of companies going forward. It's the requirement for companies, publicly traded companies, to report on environmental, social, and governance policies, but then also having to be attracted to private equity or others, ESG policies and ESG expenditures are going to be an important part of the future.
And as you look at the future of Citrin-Cooperman's dealing with clients, what areas that popped out as a result of this survey will you be putting more emphasis on?
Well, certainly technology, and that's always been a big emphasis on us. We have a business transformation group that is extremely capable and has the ability to help these companies deal with technological changes. And also, we've got a BPO group which goes in and helps temporarily shore up a company if they need a new CFO or other positions from a part-time perspective as they make these transitions. So again, it's about transitioning, and we've been there and will continue to be there with different advisory services, as well as what we've always done with helping companies buy and sell other companies. So the advisory services are very robust at Citrin-Cooperman. We continue to acquire companies with different advisory talents. And, we have our same excellent tax structuring, tax advice, and assurance group that, that really meets all of our clients' needs.
If I knew nothing about Citrin-Cooperman and about this particular manufacturing and distribution pulse survey, the surveys you've done in the past, how would you characterize it? How would you explain it to me? Let's say if I were a business person from Mars and I just landed
Mhm.
here and knew nothing about this, how would you explain it?
Well, I would explain that we are advisors that happen to be accountants and consultants, but we are a CEO's one of their main tools in their toolbox to help their company become successful. And the survey is just one of the data points that we use to help do our job of advising CEOs and leadership teams as to what's coming down the pike, what's going to happen next, so they can be agile and be those top performers that showed in the survey.
And Mark, tell us again where a person can find a copy of this and can it be downloaded?
Sure, Peter. It absolutely can be downloaded, and it's on the Citrin-Cooperman website. And it's you go into the manufacturing and distribution section in our industry page, and you can download the report. And it's I think it's a great read.
And for the future, are you already working on the next survey?
Absolutely are, and that's going to be dropped in again next June, and we'll be out there collecting everyone's opinions and data points in early 2023.
And Mark Fagan, thank you so much for being with us on this edition of Citrin-Cooperman's Corner Chats. I'm Peter Katz of West Fair Communications. Take care.